Mr. Mark Selby, how are we, sir?
Mr. Matthew Gordon, doing very well.
I'm glad to hear it. Glad to hear it. I'm going to see you. You're around for LME next week in
Yes.
London.
Yeah.
Yeah,
Yeah. One of the good
yeah,
touch point weeks in the mining industry. So a bunch of
yeah. I
meetings
think there's
set up. So it'll be good.
yeah, and there's a lot going on. I think there's a lot of. I just did a conference actually yesterday in London. 150 people in the room listening to gold and silver companies. So, I think a lot of people are kind of left the space. They're certainly coming back in. I think we'll see a bit more of that next week as well. Albeit,
Oh, for sure.
yeah,
Yeah, I saw somebody who summarizes sort of news announcements. One of them popped up, and literally, I think there were $650 million plus funding announcements. In that. In that one release that's I think happened within the space of a few days. So I think we're on the gold and silver front, we're finally back to sort of what we would call good times in terms of the kind of capital coming into the sector, which is again when you get more generalists in the space, that's when the capital really starts to flow. And then the nice thing is for those who are in the non-precious metal sector like us, is once people start making money in that sector, they can reinvest their profits in stuff that hasn't run yet. So there's a follow-on benefit that we should start to see big time in the rest of the other sectors.
absolutely. Absolutely. But big money's coming in for sure, and we're going to and we'll talk a little bit on this show about big money, government money specifically. And you guys have been a beneficiary of that. And, it's had a reaction, but more of that in a minute. But first, let's start with nickel price. What are the markets doing?
Yeah. So what's interesting is we've been pushing up against the top end of the range. We may even pop out today. We popped over briefly. We've been in a 15 to 15,500 range for the last 3 or 4 months, and then more broadly a slightly wider range than that for a good 8 to 9 months since the tariff announcements in the springtime. And so it looks like the price wants to break through. Good thing is from a support perspective, we saw ore prices pop up anywhere from 50 cents to $1 a ton last week while the Chinese were on holiday. This is a big, you have two big holidays in a year, and this first week of October is one of those big ones. So I think it'll be very interesting to see what happens today and through the rest of the week in terms of that. We've seen NPI and stainless prices, again, given into this big holiday period. We've had, sort of a big gain off the bottom. So they're consolidating a little bit here, but this holiday ends officially on the 8th. A few people will be back, but then everyone else will be back early next week. So I think nickel the nickel price might actually get interesting here for the next little bit. And as I said many times, like this fall is when we're going to see the first move. So I think this may be the start of that first move higher that I've been, this fall that I've been calling for quite a while. So
well, also I'm going to be helped by the Indonesian government starting to manage supply a little bit more aggressively.
Yeah. So what's interesting is that I was at the nickel study group meetings yesterday, and so. The Indonesian government and industry reps talking to the meeting, because now Indonesia is 2/3 of the nickel market, so it is the most important country in the world in that. And so, what's very interesting is again, it's very clear that they want to manage supply more aggressively. Get more value for the resources that they have in the ground. And so, we talked earlier about the fact that they cut licenses from 3 years to 1 year, and so. Then the forestry crackdown that we talked about on the last call. And so, they were pointing to more tightness, through seasonally. This is the time of year where Indonesia produces more, but Philippines starts to shut down. But they were really pointing to some tightness coming in the first quarter next year. So that is very good news on their front. And in conversations that I had with them, it's clear that they they want to extract more value from this limited resource. And the grade decline in some of the material that we've highlighted before, they had some data there, is quite substantive. So again, literally finished yesterday. So I'll be processing that information, and we can have a good discussion on our next call in a couple of weeks.
Good. Well, look, I kind of signposted at the beginning of this conversation, which is around sort of government funding. We've seen yet again this week, following last week and the week before, government is leaning in to critical minerals or mineral security, however you want to call it. So what have you been observing?
Yeah. So again, earlier this year, I said, look at, you're going to start to see some serious government funding announcements, by the end of the year. The U.S. has been taking the charge. Canada is moving a little more slowly, but again, I can assure people that the government funding is coming. They're just getting back to work after getting going again after elections in the spring. So lithium, the U.S. government had provided a massive funding package to Lithium Americas for their Thacker Pass. Well, they decided they want a bigger piece of the action and took an equity stake in the company and project. And then the U.S. government announced last night, and we'll see what happens to Trilogy Metals stock today, that they're going to take a 10% stake in that company, and they've got a big copper polymetallic deposit in Australia. I think the key takeaway here is that, we've been talking about this, as investors, do the work to figure out, which of those companies, which of those projects should get big direct government support. Obviously, Crawford ticks the boxes in terms of, the priority projects that Canada is looking for, and we expect to be, on that next list when it comes out. But other large-scale critical minerals projects, as I said, we'll see where Trilogy Metals closes today. Lithium Americas, since that announcement, they've more than doubled in a month. MP Materials has tripled in 3 months. They're the rare earth project that got a bunch of government funding in the summertime. And Metals Company, which was kind of stuck in permitting limbo, you had a couple, 3 or 4 sets of good words from the U.S. government, and that stock is up 10x since last December. So again, you can try and buy in as the stock is doubling or tripling, or pick away at a portfolio of projects that that have that potential for that kind of upside, right? So, again, Trilogy will be a good example today to see where that ends up.
Yeah, it's interesting. Also, I think Graphite won as well. I think they're on the receiving end of about 37 million bucks from the DOD or DOW. I keep forgetting.
Yes,
It's one of war now. We mean it.
Get what the means, yeah.
But in terms of the Canadian backdrop, obviously you're in the thick of it. You've been in meetings and certainly been in the room with a lot of these things. When you talk about things like the Critical Minerals Infrastructure Fund or a Strategic Innovation Fund, what are they looking to achieve with this deployment of capital? Is it purely political, or is there some sort of something useful in terms of not job creation, taxes, and actually getting the sector moving as a whole?
So I would say it's now twofold. It was more so sort of 18 months ago, prior to the arrival of Trump and tariffs. It was very much focused on, we want China out of the critical mineral supply chain. We want to develop critical mineral mines. We want to develop critical mineral processing plants so that we can reduce our dependence on China. And again, there's a G7 initiative for that. There's now a NATO initiative, where we're all going to get up to 5% of defense spending, and Canada has a lot more critical minerals than everybody else. We get to count whatever we spend on critical minerals as part of our defense commitment. But then the second piece is with Mark Carney coming in here in Canada, really he's been positioning this as, Canada's gone through sort of 2 or 3, massive, big project reindustrialization where the country really took a step change economically. And so, again, it's been good for us in the U.S. in terms of North American free trade. That's now not there anymore. And so we need to position ourselves, focus on our strengths, and do a lot in the sectors that we're good at and naturally endowed in, which is oil and gas, in critical minerals, and then the supporting infrastructure to be able to get all those materials to market. And so, that's this priority project list that they'll be putting out in waves through the fall as they ramp up that organization. And so, the key there is, they want big projects that are supported by First Nations that are, as advanced as possible, and, are ideally, produce one or more critical minerals. So as I said, Crawford ticks the boxes there for them. So we'll just have to wait and see when that next version of the list comes out. So
I think it's fascinating. I think the US is going to move beyond just the occasional small grant here or there into sort of equity and credit, just to keep these strategic projects actually on track through these cycles, because that's been a real killer. The momentum, stop-start momentum, in Canada too, seeing it kind of debottlenecking this infrastructure, is, I think, nothing short of good news for the full supply chain. We shall see where that ends up.
Oh no, just on that. No, that's 100% it. Like, I think governments, even before Trump came along, were kind of realizing, they sort of thought 4 years. And again, a lot of these programs have been around for 4 years. We're just going to lay out a buffet table of funding packages, and then poof, all these mines will magically appear. And again, with the Canadian government, there hasn't been a lot. We've been one of the few projects that's raised a lot of money to be able to advance, but there's been very few new critical minerals projects advance at any pace. In the U.S., same thing. Year 2 summers ago, 15, 18 months ago, on a call with White House people, and again, they're expressing their frustration. It's like, what do we need to do to start to see more mines and projects built in this country? So the government's woken up to the fact that, talk isn't going to get it done. It's get the money going. So it's nice to see it actually showing up. So
yeah, no, I think the ripple effects of this infrastructure build out is also, we're talking simple things like roads and power to these sorts of locations, which kind of maybe keeps communities together or even builds communities in some cases. Now, it'd be interesting to sort of see this more joined up thinking being applied for a sustained period as well, because sometimes governments ebb and wane, and so does the money as a result. Right. Let's talk about things. Company. We always like to talk a little bit about company news. So, Wyloo, what's happening with Wyloo?
Wyloo and Glencore. So but the key piece here is, so again, BHP has basically timed everything in nickel absolutely wrong. So they built a nickel sulfate plant, one of their only downstream processing plants that they ever built. They built it based on false assumption that there's going to be massive premiums available for sulfate, and it's 4,000 kilometers away from the nearest customer, but they charged down that path, and they declared that they were all in on nickel as one of their key focus areas. They then went, could have bought a bunch of assets really cheaply, but they waited until the most recent peak in the nickel market in 22 to 23 to buy a bunch of assets, including one for they sold for $8 million in 2014 or 15, and they bought it back for implied value of $2 billion. And then, didn't think, again, obviously based on price assumptions that were way higher than where I think the market is going to be for the next while. And then they last year, they shut everything down, and now they're actually selling their West Australian business. So the fact that they're selling their West Australian nickel business, once again, is, I think, a pretty good bull signal that the market is about to turn. And you've got Glencore, there were stories this week in the Australian Financial Review that Glencore's in the data room, Wyloo's in the data room, and we'll see, I'm sure, some of the other big private equity groups, Crux out of Turkey, who's been looking at brownfield nickel assets, will be interesting to see sort of how that all plays out. So
wow, that's very charitable. Maybe they get a tax relief on that. Sorry, should be nicer. And what about yourself? What's the news from Canada, Nickel?
Yeah, so on the news front, we put out some great drill results from Midlothian. So we've got what we call our three giants: Reed, Man West, Midlothian. What's been interesting about this deposit is, again, generally these deposits 0.2 to 0.3. You might get a few places where you've got some specific upgrading happening, but generally, just by the nature of the rock that forms these deposits, that's the grade range. And so what's been interesting is Midlothian's been really at the upper end of that range, kind of 0.29 to 0.3% nickel. So again, very happy with that. We'll be putting a resource out before year end. Again, I think for us, I would love to say it was just this news release, but we've had a great 40% move in the last month. Again, I think it's investors realizing, and we've again getting a lot more smart, high net worth, longer term investors literally rotating out of gold into critical mineral stories, and that government funding story, that turn in the nickel market this fall. People are realizing that there's a bunch of things lining up. So which is great to see. And again, showing up in the share price, which is excellent.
Well, yeah, well, it's nice to see that move, especially when you think, as you say, the nickel price and nickel market has been held or range bound for some time, and it's nice to see these kind of projects getting noted for the likelihood of actually getting into funded and into production, as we've talked about many times. First Atlantic.
Yeah, so First Atlantic, they've got the Warite deposit out in Newfoundland, so they've had some big step outs. They haven't had the assays back yet, but again, as as I know with our project, pretty once you've drilled a few holes, you can get pretty good at guessing sort of where the assays are going to land. So some visual mineralization that's there. So we'll just need to wait to see the assays. The big thing for them is after this, we'll be starting to do the metallurgical work to see what the ultimate recovery on those things are going to be. But nice to see that. Again, there's not many nickel projects progressing these days. China's done a good job of sort of dampening enthusiasm for nickel, which is what they want. And again, those of us who can survive, are going to come out the other side that much better. Next metals, again, is more copper focused now. And again, the value of the resource is around the copper. And they continue to put out some pretty decent high grade intervals. Again, the challenge with that, it's deep, right? They did some metallurgical results, which were better than it was done in the past, but it's still, you're several hundred kilometers inland, and the nearest smelter is quite a distance from there. So, we'll see how that goes. And again, we'll see how that plays out. The other big one that's had some sort of good infill drilling results is Ardia. They're working with Mitsui and Mitsubishi on their feasibility study for their, that's the biggest and best of the undeveloped Australian laterite projects. And so, that will be quite telling in terms of, given the cost structures in Australia, can you build an HPAL plant, at effectively, sorry, I think I said Mitsui and Mitsubishi, it's Sumitomo Metal Mining and Mitsubishi, I believe. So, Sumitomo Metal Mining has been one of the few companies to make it work. So we'll see what that DFS, how that unfolds. I think that's expected sometime next year. So, fingers crossed on that one. But that's it in terms of news. So
fantastic. Government funding, number one news, and I guess investor sentiment starting to look a bit better.
Oh, 100%. No, 100%. Like it's $4,000 gold or almost $4,000 an ounce gold, starts to get some interest in the sector again. And so, the key piece is we need. Mining has been out of favor with the generalists for good 10 plus years. And so, to really have a massive re-rate and see the kind of valuations that we saw back in the early 2010s, back in the mid 2000s, you need that generalist money to come back in the story. So I don't care how it happens. If $4,000 gold starts to shine the light on mining, and then they realize, okay, well, that gold stock's already pretty overvalued, but these other commodities, these other stocks in those commodities look pretty undervalued, then I'm happy. So no, I think it'll be an interesting rest of 2025 and 2026.
Fantastic. Like Mark, let's maybe hook up in a couple of weeks, and maybe let's lean into that kind of the government funding. Which seems to be more abundant these days, and look to some of yourself, obviously Canada Nickel, and some of the companies benefiting from that, and get into the weeds a little bit. Mark, appreciate your time today. Thank you.
Sounds great, sir. Thanks.